All right, it is Wednesday. Well, it's Tuesday night, but Wednesday morning, 1 a.m., almost 1:10 a.m. It's pretty early. This is the video log that takes 30,000 to a million, of course, as you know. Um, I am not sitting an all-time high, but not too far away from it. All right, I'll share with you in just a second the account and what's going on. Also, later, I'm excited because it's EXK scaling time. That's right, I'm going to begin the third public official scaling and scaling out of EXK. Now, as I've discussed many times before, this has been the most profitable trade in my entire life. So I've done it many, many times, and now I'm about to do it again. If you don't trust it, go back in the videos. You'll find that I've done it twice already and I've profited from the EXK scaling in, scaling out method. And I will show you live how I'm gonna probably, hopefully, profit from it again. Now that EXK is dropping down below 250 fairly considerably, I have already purchased 200 shares at 252, I believe, and so I'm beginning to scale in to EXK. Had as much as like 2,000. I don't know. It was a lot of shares, 2,000 shares maybe, and I've sold them all for profit. So now I want to do it again. And that silver, now that silver is dropped and gold is dropped, EXK sitting below 250, and I think it's time to purchase some more, especially if it drops tomorrow and the day after. I'm gonna be really going after the stock because silver, although it's had a major correction, it hasn't corrected so much that EXK isn't really making any money. It's still in the 17s, and they weren't losing that much money in the 14s and 15s. Now, I don't know about all this latest. I'm gonna have to try to see and when their latest earnings report comes in, but this kind of stuff takes a while to kick in. They have to adjust their grading, and it's still possible that the company, the silver mining company that is EXK, which is Endeavor Silver, a Canadian company mining in Mexico, it is possible that they high grade so much that they kill a lot of their profits off. But in a sense, that's kind of good because, well, high grading anyways, because it leaves a lot of the higher quality deposits in there. It helps them survive longer and all this good stuff. But let's just not make this all about EXK. Let's go to the account here and I'll show you what's going on in the in this Robinhood account. I'm sitting at 68,416. If you're just listening to the audio, actually make that 438. Apple had a really good day despite all of the negative action in the markets. They actually finished the day up. It looks like the aftermarket is down 0.5%, but that's okay. Because it finished up, my option shares actually finished down because my one call sell, a 200 call sell, is worth a lot more now than the two put sells that I've sold. The put sells are almost worthless, and I'm thinking about, I don't know if I should just buy them back at this point. Maybe not. It's still almost $1,000 on the table by the end of the year, but by January 17th next year. So, I might just, I think I'll just let them run. The Apple call I'm afraid of a little bit, but this, I really want to keep it on. And the reason I want to keep it on is because I don't have anything that I'm hedging my account with right now, except the fact that it's well diversified and well balanced, but with non-correlated assets. But I don't have anything really short, so that call option I think is a good start. I mean, it's $3,000, right? That I'll be getting if Apple drops down to below 200 by January 1st. I'm sorry, 17th next year. So it's kind of a short, right? I'll be basically erasing $3,000 worth of liability. Now that's all good and gravy. However, since we're on the topic of iPhones and Apple, I I don't think it's gonna drop that much. I mean, they're showing such huge relative strength right now to the market, right? The market's dropping, Apple is not. I mean, nobody wants to bet against those iPhone sales. I mean, it's crazy out there, right? So, oh, by the way, in other news, guess what this is? This is the iPhone 11 Pro. So, I didn't really need an upgrade. Like I mentioned before, I have my 10 over here, right? So, I didn't really need an upgrade, but I decided to get it anyways because I've already had the 10 for like 2 years and was ready for something new. I have a little transparent case in case you guys care. Little transparent case so you can see the gold. I'm a big fan of gold, as you may know. Let me give you the webcam zoom here. Alright, there it is. Know that you haven't seen it. And this camera obviously is not as good quality as something else you might find on the web. Here's in comparison. Look about the same, just bigger cameras. The screen though is a lot brighter, but anyway. I'm not gonna make this an iPhone review. Yeah. But I just want to tell you that I'm pretty happy with it. Like, it feels good in the hand. It's got some extra weight, but so I just actually am positively impressed by the upgrade. Even though it's basically the same phone with just a little hardware upgrade and like, a couple cameras, and the software of course is the same, the iOS. So it's got a little bit of hardware upgrade, but for 2 years worth of technological advancements, not that much. That I'm really waiting for that 2020 upgrade, and I think that's when the big blow off is going to happen on Apple, and I'm going to try to cash in a lot of the Apple positions that I've been building. But the problem here is that I was thinking that the market is going to be falling off a little bit after this announcement plays out into the end of the year, and I'm still hoping that does happen because I want to erase the liability on first of all on the call option. That's $3,000. That's quite a bit. So that's number one. I want Apple to finish the year around 200, or more accurately January 17th, and second of all, I want to use some of that money, right? I want to buy extra Apple stock. I want to buy more, or figure out some kind of option play configuration that I'll be able to profit from next year's bump in iPhones. I think they're going to have a real big change in the entire layout, and it's going to be, a great looking phone. Unlike this one is not that great. I mean, look, I'm not a big fan of the square thing. They kind of made it a little bit better looking by rounding the edges a little bit and all that, and making it the gold here. I like the gold instead of the black because it kind of blends in. Like from far away, it just looks like 3 dots instead of that stupid square. So anyway, I think next year is where it's at. I think they're gonna make a big breakthrough. But so that's kind of what's going on with Apple here. Now, moving on. EXK, Apple, C-SPAN, everything is pretty average. Main Street down 21. The big drop happened in Chemical today. $234. Now, it's still above $9, which I'm alright. I'm pretty happy about. It didn't reach 10 on this run, and it looks like it's starting to score our lower low. So it might go down further from here, which is dangerous somewhat. As you can see, $234 minus today, but plus 34 on the options that I've sold against them. And luckily for this dropping price, I have all 900 shares put up against some covered calls, and I'm collecting cash premium off of the fact that the price is dropping and probably staying below $10 for a while. Now I have $11 call here, $12 call, $11 call, $10 calls, a couple of them, 3 of them, and another $11 call. So if the price stays below $10, I'm doing pretty well. I still have all this money. 1 second. All right, I still have all this money that I can get if the price stays below $10. So you can add them up: $25, $8, $10, $35, 15, 10, 18, 8, 13. So I could be making more money off of this. Obviously, I don't want the price to drop too low because then I'll take a big hit on my actual position of 900 shares, which currently is valued at $8,316. So that's the big news there. It's just Cameco is really hitting me, and of course URA, the uranium sector ETF. I've sold one call at $11, and it might actually, I don't know if it will hit or not, but it's for November 15th. I wouldn't mind it hitting actually, because URA has been performing so much worse than Cameco. Like, I will forego the big gains in URA in case there's a big spike for the fact that I can collect premium in the interim. Like, I don't want to keep this downward trend going here. It's really hard, and the call options that I sell against the URA, the fund, they're not worth as much as Cameco anyway, so I can't really profit from a sideways market, and this position is really eating at me and is not giving me any help with my account. So as you can see here, since I've purchased the shares a long time ago, I'm actually down 28.5%, which is a little over $1,100. Imagine if the account was $1,100 plus, right? If I never purchased uranium ETF, you know, I would be sitting at 69,600 right now. But anyway, so that's the big losers of today. Now, someone mentioned real briefly here that, you know, I was asked if I'm going to stick with Robinhood now since a lot of platforms are going free. And the answer is yes, because I still think that Robinhood is the best app. It's the cleanest, smoothest, easiest to operate, most friendly. It gives me the most joy to operate. Right, I've operated with 2-3 other platforms before this one, and I don't enjoy them as much. Everything is very numbersy, technically, you know, oriented. Really hard to find all the menus and everything else. So I mean, even the Robinhood website is pretty clean looking. Like, I really like the way things are organized. It's really hard to find where everything is and all the other sites, and it just looks the same. It's like a textbook, you know. It's like a school textbook. It's just really not fun. So I don't plan on doing it. Like, I looked at Webull, which is a competitor of Robinhood, but I just don't like it, you know. I'm not a fan. So I don't know what to say. Oh, looks like something repriced. I'm not a fan of Webull. It just looks like any other broker. And if you like that look, that's fine, you know, but it's just not for me. Like, I really like Robinhood. I like the way they do their options and everything. And I like the freedom that I have. It's not like a robo-advisor type of app, right? So I like that freedom. I don't like people, you know, I don't like some predetermined asset allocators, you know, telling me where to put all my stuff. I mean, I have that for my Roth IRA account, but because I don't want to I just want to set and forget it. But this I want to do actively, so it suits me perfectly. So that's the answer to that. Now, that's Apple and that's EXK. That's the account update, and I'm sticking with Robinhood for now. But if you think there's a website or app that's better than Robinhood, and it's cleaner, it's easier to use, and it's more convenient and cooler, I don't know, let me know about it. I'll definitely review it. I'm totally open to switching. I mean, I'm open to improving any aspect of my life, right? So if even my trading style and everything, if something comes up that works better, and I'm open to change. Okay, I think that's about it for now. This is a fun one. Talking some Apple EXK. EXK, my roots. Can't wait to buy some more shares. I think it's super undervalued on around $2 here at over $17 price of silver. But, you know, of course, as always, anything I say is not financial advice. You got to do your own due diligence and research, etc., etc. Don't sue me. Okay, bye. Peace.